You ever notice how sometimes the stock market feels like a roller coaster? One moment you're up, the next you're down, and in the middle of it all, a single company can become the center of attention. That's exactly what happened with Opendoor today. And if you're following this stock, or even just curious about where the housing market and real estate innovation are headed, you're going to want to stick with me. Because what happened today may look small on the surface, but it could end up being a pretty big deal. So let's break it all down piece by piece, and by the end, you'll have a much clearer picture of what's going on. Earlier in the day, Opendoor's stock was climbing. Investors were waiting, watching, and basically holding their breath for news to drop. At that point, it wasn't clear which way things would go. And then the news finally hit. The stock touched a high of around $8.80, then pulled back, eventually closing the day up about 1.13% at $7.86. Trading volume came in at roughly 176 million shares. Not massive compared to some of Opendoor's busier days, but still a solid number that shows a lot of eyes are watching this company. Now, why did this happen? The answer ties back to the broader market and some fresh economic data. The ADP jobs report came out, and that shifted expectations for what the Federal Reserve might do with interest rates. Suddenly, there's a stronger chance of a 25 basis point cut, maybe even a 50 by the end of the week. If you've been following along in my past videos, this played out exactly the way many of us expected. And while this may sound like small details, trust me, Wall Street pays very close attention to these signals. Lower rates mean cheaper borrowing, which often boosts housing demand. And if there's one thing a company like Opendoor thrives on, it's activity in the housing market. But it wasn't just macroeconomic data. Opendoor also had some company-specific news. They filed an SEC 8K related to an older SPAC lawsuit. At first, that might sound concerning, but here's the important part. No financial hit to the company. The legal fees, almost $2 million, were fully covered by insurance. No admission of wrongdoing, nothing damaging to the balance sheet. In other words, this is one of those filings that looks serious until you read the details. And then you realize it's basically a non-event. If anything, it clears some clouds away. Now, here's where things get interesting. Instead of putting out a flashy press release, Opendoor quietly rolled out something new, a 7-day home test drive and a 100-day warranty for appliances. Think about that for a second. Buying a home is one of the biggest financial decisions you can make. And now, Opendoor is saying, try it for a week. If you don't like it, walk away. That is bold. That is outside-the-box thinking. And it's exactly the kind of idea that separates innovative companies from the old brick-and-mortar real estate model. Imagine being a home buyer in today's uncertain market. Rates are high, inventory is tight, and confidence is shaky. But if someone tells you that you can live in a place for 7 days before fully committing, suddenly the risk feels lower. Add in the 100-day warranty on appliances, and now you've got peace of mind. Honestly, if this program works as advertised, it could be a game changer. Of course, there will be questions. Legal fine print, mortgage details, practical issues to iron out. That's normal. But the fact that Opendoor is even attempting this shows a willingness to innovate that investors should pay close attention to. The one thing I think they missed, they didn't put out an official press release. They just posted about it on social media and did a short video. That might not sound like a big deal, but in today's market, it matters. Why? Because algorithmic trading, the computer-driven buying and selling that makes up a huge chunk of daily market volume, often reacts to official news releases. Without that formal press release, the algorithms didn't pick it up the same way, and the stock didn't get the automatic momentum boost it might have. That's the difference between a small green day and a big breakout rally. Another detail worth noting. On September 19th, politician Cleo Fields purchased shares of Opendoor, somewhere between $1,000 and $15,000 worth. Now, political stock purchases always get attention. People watch what senators, representatives, and other officials are buying and selling, trying to read between the lines. Does it mean Opendoor is about to explode? Not necessarily. But for some investors, it's one more reason to keep the company on their radar. And then there's short interest. At the end of the day, shorts added about 1.68 million more shares. That brings total short interest to around 19.77% of the free float, about 140 million shares being shorted. That's a big number. And high short interest can mean two things. One, there are a lot of people betting against the company. Or two, if the stock gets some momentum, all that short pressure can flip into a squeeze, sending the price much higher. So here we are. Opendoor had a green close, some interesting data points, and a brand new program that could shake up real estate. But the bigger questions remain. Will investors buy into this vision? Will the market reward innovation like the 7-day test drive? And does the growing short interest set the stage for a big move in the future? That's where you come in. What do you think? Is this new home trial program enough to attract buyers and give Opendoor an edge? Does the politician's purchase look bullish to you, or is it just another headline? And with nearly 1/5 of the float shorted, do you think a squeeze is possible? Drop your thoughts in the comments. I'll be reading them, and I'm curious to see where the community stands on this one. And just before we wrap up, here's an important note. This video is for informational and educational purposes only. It should not be taken as financial advice. Always do your own research and talk to a licensed financial advisor before making any investment decisions.